Good morning and thanks for tuning in. You're watching All You Need to Know on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. US President Donald Trump sought to push China into a trade deal before 2020, saying that negotiations will only get tougher if he gets re-elected. Oil prices fell to their lowest in a week, led by Trump's trade warnings and poor macro data emerging from the US. UK Prime Minister Boris Johnson began attempts to trigger a snap general election after his Brexit strategy suffered a humiliating defeat in the House of Commons. A stronger dollar continued FI selling, and weak macro data dragged the Indian rupee to a 9-month low on Tuesday. And Karnataka Congress leader D.K. Shivakumar was arrested by the Enforcement Directorate last night in connection with a money laundering case. Let's talk about the US markets now. They resumed trade on Tuesday after a Labor Day holiday on Monday. Stocks ended lower after US and China continued to drag their feet on a prospective trade deal. Poor macro data in the form of weak manufacturing PMI also weighed on investor sentiment. Renita Young of Bloomberg News wraps up Tuesday's Wall Street session in this report.
U.S. markets ended lower on Tuesday as the United States and China still have yet to ink a trade deal and, in fact, hit another trade stumbling block. The two have yet to agree on just basic terms, and there's still a lot of mistrust between the two. During the session, we saw some data come through U.S. manufacturing contracting for the first time in about 3 years. The U.S. dollar declined versus some major currency competitors. Treasuries rose, and orange juice futures, interestingly enough, last week they were elevated because of a threat to orange groves in Florida because of Hurricane Dorian. But today, on Tuesday, they're actually a little bit lower because that threat has since passed. Florida is the top U.S. grower of oranges. Meanwhile, we still are in the middle of corporate earnings season, with cons rising more than 18% on second quarter adjusted earnings per share that beat analyst estimates. And coming up will be American Eagle Outfitters, Slack, and also the National Beverage Corp. And that's a look at your Tuesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's also complete the picture on international markets. Take a look at the Asian markets that have opened so far. Bloomberg's Rosalind Chin is joining us live from the Hong Kong studios. Morning, Rosalind. How's it looking this morning?
Well, we've just had some data out on the Aussie economy. Second quarter GDP numbers coming out, an increase of 0.5% quarter on quarter, which is in line with economists' estimates. It does look like the economy right now, we're sort of economists that are in wait and see mode. We did see the RBA holding at a key cash rate at 1% earlier in the week. We had some numbers out yesterday on the current account where it registered a surplus for the first time in 44 years in the last quarter, underpinned by a surge or a bit of a spike in the iron ore price. But going into the future, that is not necessarily sustainable because that spike in iron ore prices was driven partly because of increased demand from China, because of increased steel production there. Also, there's also been some disruption in supply, which has helped to increase the iron ore price as well. So that going into the second half of the year may not be a sustainable growth in those iron ore prices. Therefore, we'll have to see how the economy continues to perform for the rest of the year. We also see that there's some numbers expected today on China PMI as well. In the US, as you mentioned earlier, there were some very weak manufacturing numbers on the ISM report, and that, of course, is something that investors around the region have been looking at, and that's part of the reason why some of the stocks were trading a little lower earlier today. We did have the MSCI Asia Pacific actually trading in negative territory a little bit earlier. It's flipped actually into positive territory right now. It's up just under 1/5%. In Japan, the Nikkei is trading higher, but only just up by 0.05%, sneaking into positive territory there, whereas the Kospi is actually making gains, up by nearly 0.5%, and it's the big hitters making gains on that index. We've got SK Hynix, Celltron, Samsung Electronics all moving higher at this point in the session. And a quick look at oil, because that did slip a little bit below $54 a barrel earlier in the earlier in the day. Right now, of course, we've got Brent crude at 58.42 and WTI at 54.17, so sneaking back just above that $54 a barrel mark. So really a very mixed picture today. We've got these, all these economic figures coming in, which is driving a little bit of the consumer sentiment, investor sentiment rather, as we are still waiting, of course, for more progress perhaps, to be made on these US-China trade talks, which does look like it is beginning to make even more impact on the economic numbers we're seeing out of basically all the economies around the world. Back to you.
Thanks so much for that, Rosalind. In fact, that PMI data that Rosalind was talking about, the first time there's been a contraction in manufacturing PMI in 3 years in the US. So that's a significant sign, and that's perhaps one of the reasons why the US markets ended lower. Now, despite the slowdown that's becoming apparent in the US economy, President Donald Trump is unfazed, seemingly. He is trying to prod China into a trade deal before the presidential elections in 2020, saying that the terms of negotiation will only get tougher should he win another term in November next year. Sarah McGregor of Bloomberg News brings you more details in this report.
We have our 2020 elections over a year from now, but in the meantime, the two sides can't even agree on the date for talks that were supposed to happen in September, let alone an agenda, or whether, whether they're really going to happen. So I think, it really seems far off from any type of deal. To talk about a deal right now just seems a distant prospect. We just had this escalation of tariffs over the weekend, and the two sides aren't even at the table again. They're not speaking at the highest levels.
Sarah, we're now seeing Huawei lashing out at the U.S. government, saying that it's harassing its workers. What is reasoning behind that?
Right, and we're sort of, I guess, we've forgotten about Huawei the past few weeks in this trade war, but of course they've become, some might say, a casualty or at least a player in it, given the fact that the U.S. put them on this trade blacklist. And Trump said he would go easier on them. Those allow some U.S. suppliers to restart their sales, but those applications have not been approved. And so the tensions now, too, between this, major Chinese telecommunications company and the U.S., that they're actually at a higher stake right now. And I think the point that Huawei is trying to make is that, it's across the board. The intimidation that they're feeling right now, some of the backlash that they're getting, sort of being demonized by the administration, whether, they would say there's not evidence to back it up, though the administration has, provided that in many reports. They've become caught up in this trade war.
All right, so Donald Trump, on one hand, says in a tweet yesterday that he wants China to come back to the negotiating table because the terms of negotiation might just get worse if he gets re-elected. On the other hand, Chinese President Xi Jinping has warned party leaders of a prolonged period of struggle as China grapples with a slowing economy and a more confrontational United States. Tom McKenzie of Bloomberg News gets us more details.
We heard from President Xi earlier in the year calling on the Chinese people to prepare for another long march, and this then builds on that comment. We heard he addressed cadres from the Communist Party on Tuesday and told them, as you say, to prepare to steel themselves for a long, drawn-out fight. And he named a couple of key challenges and pointed to a couple of key challenges, including economic risks, security concerns, and also Hong Kong and Taiwan. And President Xi said these issues may not be resolved until 2049, another 3 decades from now, of course. And 2049 is what the Communist Party are looking to. That is when they're going to be celebrating, they hope, their 100th anniversary. So yes, this was a message from China's leader, from China's president, to the Communist Party, but also more broadly to the people of China, that they need to steel themselves for essentially what could be a generations-long fight as the US, of course, continues pressure on the trade front, but also on the security front, whether that's selling arms to Taiwan or, of course, focusing on Huawei and trying to restrict the technology advances that China is making.
Tom, the slowdown in China also leading economists to revise down their growth forecasts. So what are the expectations?
So China itself has set itself a target in terms of GDP growth for 2019 of between 6 and 6.5%. It looks like, according to the economists, that we're going to be towards the bottom end of that range by the end of the year. You've got the likes of Oxford Economics saying that by Q3 of 2019, you're going to be looking at GDP of about 5.7%. And Oxford Economics thinks that's going to continue until 2020. They're looking at around 5.7% for 2020. Others, like UBS, think growth here could slow to 5.5% by next year. Now, that is significant because President Xi, we were talking about the economic challenges, he has set himself, and the party has set itself, a challenge of by next year doubling GDP growth from 2010 levels to create what they've described as a moderately prosperous country. Now, to get to that point, you need to notch up 6% at least in 2019 and at least 6% in 2020. According to these economists, that isn't going to happen. So again, that points to the challenges that President Xi is under. Now, you have the likes of Bank of America, Merrill Lynch saying that policymakers here, and warning that policymakers here are behind the curve when it comes to the tools, the stimulus needed to address the slowdown. They say more needs to be done. And of course, there's a debate as to whether or not that involves lower benchmark rates or cuts to RRR, or in fact, easing of some of the restrictions around the real estate market. Those debates continue. Some of the economists expect potentially another RRR cut. Others are discussing a benchmark rate cut. Let's see what happens. But certainly the focus is on what policy steps are initiated from here.
Meanwhile, the twists and turns in the Brexit drama continued, with Prime Minister Boris Johnson facing a humiliating defeat in Parliament. The motion to pass a no-deal Brexit was defeated by 328 votes to 301. The stage is now set for a snap general election in the United Kingdom. Jody Schneider of Bloomberg News tells us what Prime Minister Johnson plans to do next.
He says he's going to start the motion for a snap election with October 14th penciled in as that date. Of course, the Brexit deadline is October 31st. He says he doesn't really want an election. He knows the public doesn't want one, but he thinks it's the only way to try to get Brussels to move, to get something done. He says so the public should decide who they send on October 17th to deal with Brussels. He's been playing this kind of game of chicken, saying he's willing to leave, to take that no-deal Brexit and to leave without a deal and try to force the hand of the EU, which so far hasn't been forced. Of course, Parliament saw it differently yesterday and said, we don't want to play this game with this strategy. We want to require you to have to go ahead and have a delay. So now it's a test of wills in Parliament.
Now here's Bloomberg's Sue Keenan with the First Word headlines.
We start with the latest on the Fed. Boston Fed President Eric Rosengren says that the U.S. economy remains relatively strong despite growing threats, and he's not convinced of the need to cut rates later this month. He says if consumers continue to spend and global conditions don't deteriorate further, the U.S. should grow at 2%. If so, Rosengren says no immediate policy action would be required.
Kind of headwinds could become more appreciable. If they do and they start slowing down the economy, I think we should react once we see it in the data, but I don't think we should anticipate necessarily that that's going to happen. So as long as we're growing around 2%, I don't see nearly as much of a need for taking immediate policy action.
To China now. China has softened its tone on Hong Kong, saying peaceful demonstrations are permitted, although violence would be punished. Officials also continued their support for Chief Executive Carrie Lam and dismissed protester demands for true universal suffrage. Meanwhile, prominent democracy activist Joshua Wong visited Taiwan to urge support for Hong Kong, calling for mass demonstrations in support of the protest movement. And to the 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn now to the Indian markets. Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Agam, as of now, mixed cues coming in from the international markets. Asia is up or down. We can't really get a clear sense of where it's heading. The US market's clearly heading downwards. How are we looking here in India?
Alex, so we saw a very, very sharp decline yesterday, but the volumes are average. So it's anyone's guess as to how we're going to see markets pan out, but there very well may be a chance of a short covering as indicated by the SGX Nifty future. So we are expecting a positive move, at least as far as the opening is concerned, based on the SGX. As I was saying, we saw a 2% cut on the index yesterday, and the weakness wasn't as pronounced in the broader markets as it was in the case for the index. But again, your banking indices did see a lot of pressure. Essentially, the PSU banking index, which was down by as much as 5%. A whole host of public sector banks, including Punjab National Bank, Canara Bank, Union Bank of India, all of them dropping and with a lot of intensity. But let's talk about your ADRs. And again, for now, we're looking at some amount of weakness there. But it's more of the case of ADRs catching up with the weakness that we saw in Indian markets. Coming down to your fund flows, the selling has resumed from FIIs. Of course, day before it was largely on account of a bulk deal that the number was positive. But once again, we're looking at 2,000 crores moving out on a net basis. On the other hand, DIs not being able to buy as much, just to the tune of 1,250 odd crores on a net basis. Let's move on and talk about your contributors, and selling was all round. So while we did have others contribute to selling worth around 123 points, we also had heavyweights like Reliance Industries, HDFC Limited, ICICI Bank and L&T contribute to the other half of the selling coming through. Hardly any support whatsoever from some of those tech names along with BPCL. But moving on, let's also talk about your futures and options space. And we saw fresh shorts building in with 2% increase in open interest in the Nifty futures and the Nifty banking futures, seeing a 13.5% increase in OI. So a lot of shorts into the system. For anyone who's expecting a significant amount of short covering, it would be an extremely risky proposition to take such a position. Of course, it's going to be a lot with respect to wait and watch. And of course, as long as the trades are planned out, that would be the best way to go about in today's trading day. You do have a lot of writing around the 10,800 put, as has been the case, and that'll show up for you in this case too. A little more call writing around the 10,900, 11,000. Let's move on and talk about your India VIX. That has risen by as much as 11%, now at the mark of 18. And on rather expected lines, the put-call ratio has fallen to, a neutral level of 1. And in terms of stocks, watching out for, MCX India, deep cuts of around 10%, deep cuts for Canara Bank, as well as I was suggesting, United Breweries looking at a drop around 4%. It had recently picked up, but all those gains have been washed out. IDBI Bank, however, one exception in the public sector space, but that's because of fund infusion from the government as well as LIC. Moving on in terms of stocks which are seeing unwinding against CESC, Ashok Leyland, IGL, but the momentum clearly was towards losers, Alex, and we're just going to have to wait and watch whether or not there could be just some respite for those who are long.
Thanks so much for that, Agam. All right, let's also talk about oil. There has been downward pressure on oil prices, and it's unlikely to ease until the US and China get back to the negotiating table. That's according to Vandana Hari from Vanda Insights. Oil prices had fallen to their lowest level in a week after trade negotiations remained in the balance and on account of disappointing macro data from the US. Listen in to what Vandana Hari had to say in an interview with Bloomberg Television earlier today.
As long as China and the US do not get back to the negotiating table, and not just that, but make some substantial, tangible headway in resolving their trade conflict, I don't see the downward pressure on oil alleviating. Having said that, and in your introduction you were asking, are there any bright spots at all in commodities? I think something to keep an eye on is that while there is an increasingly gloom and doom scenario, it is entirely possible that President Trump changes tack once again. We've seen enough of these about turns so far this year. And actually, the two do get back to the table. And if that happens, I think at this point, because we've reached such lows in terms of market expectations, we could see a bounce back in prices.
Sure, a presidential tweet could be all that it takes, right? What about the supply side of things, though, because we have seen OPEC sort of stay on the sidelines of these trade tensions?
To my mind, it's entirely understandable and probably wise for OPEC OPEC and non-OPEC not to try and recalibrate their supply, given the degree of uncertainty there has been in the past few months about what's going to happen to demand. And let's not forget, though we have all of this weakening macroeconomic data and just generally downward revisions in economic growth and oil demand growth rates that are expected, nobody really knows how exactly it's going to translate in terms of the physical demand for physical oil. So they've been wise so far. I do think that it is the supply story is starting to come back center stage the last few days, and including Bloomberg prominently, we've seen surveys showing that OPEC production rose for the first time month on month in August. And I think that is, to some extent, has actually become a double whammy for the markets, because the last thing the oil market needs right now, even though there is uncertainty over exactly how much oil demand is going to pan out, the last thing the market needs is more supply from OPEC.
Of course, WTI crude fell significantly overnight. It's currently at 54.36 or thereabouts, of 54.15 as of now. All right, let's talk about the stocks in news now. Somit Sarkar is joining me now to tell you all about the stocks that are on his list. Good morning, Somit. What do you have for us?
Good morning, Alex. On the stocks and news, firstly, we have ICICI Lombard General Insurance. Now, IRDA, that is Insurance Regulatory and Development Authority of India, has waived off the earlier imposed lock-in period on the equity shares that are held by Fairfax. Now, the lock-in period was till March 29, 2021, and currently Fairfax hold nearly 10% stake in the company. Now, what this means is that going forward, Fairfax can now sell its stake in ICICI Lombard General Insurance. Second on the list is wasted tillers and tractors. The August sales numbers for the companies are out. Now, the power tiller sales were down nearly 13% to close to 1,437 units, while the tractor sales were up nearly 57% to close to 813 units for the company. Also, the steel stocks would remain in focus today because India Ratings and Research has cut its FY20 steel demand growth estimate from 7% to 4%. Now, the outlook has also been revised to negative from stable for the rest of financial year 2020. Now, the sluggish steel demand growth expectations owing to concerns in the end user sectors like auto and real estate and construction has led to this lower demand forecast and the negative outlook for the sector, says the rating agency. Now, Gujarat Alkalis will also remain in focus because the board will consider share stock split on September 27th. Varun Beverages would also remain in focus because the company has fixed the floor price for its QIP issue at close to 644 rupees, which is at a premium of nearly 2% to the yesterday's closing price. Lastly, MCX would also remain in focus today because HDFC Mutual Fund has acquired nearly 3.6 lakh shares, that is 0.7% stake in the company at around 883 rupees per share.
Thanks so much for that, Somit. Now, the global protest on the worsening condition of the Amazon rainforest has made many think that they were too late to wake up to the crisis that Brazil is facing on land grabbing and for agriculture and pastures. But an indigenous Amazon village leader has been on a mission for quite some time now. He's working to make sure that illegal land grabbers and loggers stay away from national forests and reserves. Take a look.
Kati me ongai te ora ka ju imakin kete me ongai te kute bo obiken ya mono imakin kete madere ru gani peru po cremo ora imakin kete akatinha ka imakin kete no mana boya ne Mana be ne kubendiete. Bendiete ba. Ni ari kabi kagam ibagam tu marote ni amoi ka tot puga kagam nyun. Are mi tap jo ikra. Kam kra ka ji are bo. Koi no toite. Are mi ma bo kam ku ben. Jora imokin keto. Are bo yang putaro.
Então, é um trabalho diário que a gente faz deslocamentos pelo rio e pelas estradas, sempre no limite da terra indígena. Essas bases são montadas no limite da terra, não no meio, exatamente para conter esse avanço, né? Hoje nós temos problemas com avanço de cerca do fazendeiro para dentro da terra indígena.
Let's take you through some of the stories that are available on the website bloombergquint.com. First up, the Supreme Court yesterday said that the CBI custody on former Finance Minister P. Chidambaram would continue till September 5th in the INX media corruption case. The Apex Court asked Chidambaram's counsel not to press for the interim bail plea till September 5th. And a task force set up by the RBI has recommended that self-regulatory body consisting of banks, or that is lenders and other market participants be created, which will come up with specific modalities on developing a secondary market for corporate loans. The task force, headed by Canara Bank Chairman T.N. Manoharan, felt that a secondary market for corporate loans would ensure better deployment of capital by public sector banks and would effectively reduce the dependence on bank financing for Indian corporates. That's all you need to know going to trade today. Do stay tuned though, there's a lot more coming up in just a short while. This is Bloomberg Quint.